Hi guys, this is Vikrant and I'm presenting my stock pitch report for Bajaj Auto. So the values calculated are my own and have no bearing or responsibility if they are wrong or misrepresent Bajaj Auto. The valuation was carried out in three parts, beginning with fundamental analysis, followed by ratio and then equity valuation. So let's talk a bit about Bajaj Auto. It happens to be the second largest motorcycle manufacturer in India, with a global presence from Mexico in the west to Japan and Philippines in the east. So the results of the SWOT analysis carried out for Bajaj Auto are as follows, along with the results for Porter's analysis, which shows that the threat for new entrants and bargaining power of sellers is low. At the same time, competitive rivalry and threat of substitute product for Bajaj Auto is high. On the other hand, bargaining power of the buyer is medium. These are the key ratios for Bajaj Auto for the year 2013 and have been compared with Tata Motors, which is the another major player in the auto sector. These ratios and figures clearly show that the Bajaj Auto has quite a strong position in terms of financial and asset backing. But this also represents that the management has been inefficient in utilizing these assets for further investment and expansion. So we move on to the dividend discount model. First, we consider the zero growth model, where equity is dividend divided by RE minus GD. The intrinsic value boils down to 637.81 rupees. When we consider the two-stage model, it cannot be applied in case of Bajaj Auto because the growth rate of dividends is not constant in the initial stages of our consideration. The current value of per share for Bajaj Auto is 2,103 rupees. So we consider the free cash flow model. These are the variables that we need to calculate for free cash flow to the firm and as well as the equity. So RF is the risk-free rate of return in the market, which is 7.5% in India, and this is the rate of long-term Indian government bonds. RM is the market rate of return, which is calculated using the annual return on CNX Auto Index for the last 10 years. So the weighted average cost of capital is 43.9%. These are the formulas for free cash flow to firm and equity, followed by the respective figures. So the intrinsic value per share for Bajaj Auto is calculated to 46.36 rupees using free cash flow model. This clearly indicates that Bajaj Auto is overvalued, since current value per share for Bajaj Auto is 2,103.5 rupees. So the recommendation is to sell. To summarize, the fundamental analysis indicates that the company has registered high level of growth in the recent past, but it is not expected to continue. Ratio analysis shows that Bajaj is very strong in terms of its assets, but weak in terms of investments. And equity valuation using free cash flow model showed that Bajaj Auto is overvalued and the recommendation is to sell. Thank you.